Let me ask you about another space which can, you can make a case for a fairly secular kind of a growth out there. The holiday vacation space. You, I think, own Mahindra Holidays. What are your thoughts on the business prospects and valuations for Mahindra Holidays now?
Right. So just taking a step back then on the first question that you asked about how is it to ferret out value and search for mid-caps. So if you were to look at the conventional consumer companies, and this is clearly a consumer company, it is into vacation club ownership and, in effect sells rooms, but, has a package around it. So this is a consumer cyclical, as you would appreciate, which was quite reasonably valued, if not at a discount to what standard FMCG peers were trading at. When we started buying into this company, sort of before the stock split in the 380-400 range. And the business prospects are very interesting, as you bring out. Their membership is about 210,000 members at this juncture. And there's a constant point that they highlight that in terms of annual car sales, where the ticket sizes are twice or thrice their average ticket size of 5 to 6 lakh rupees a car, is upwards of 2 million on an annual basis in India. So there is a large opportunity that is there in front of them. Now, as is of travel and vacation, this is at a higher level of discretion on the part of the consumer, where purchases can be actually postponed, versus car, which gives in some sort of sense is in a much higher hierarchy for purchase on an immediate basis by the family, the moment there is discretionary income and ability to spend. So that is the challenge for this company on how do they overcome this sort of immediate aspect on creating and taking this as an important aspect for Indians to take vacation. So the large opportunity, big picture, is definitely there. The challenge is how do they convert this opportunity for sort of long-term growth. Their growth has been just around the sort of nominal GDP growth in terms of revenues, between 13 and 15% over the last sort of decade. And we are hoping that actually this, in the typical sort of consumer S-curve, Maslow's need hierarchy curve, as consumers get more wealthy and the income effect actually plays out, we see more consumers being predisposed to taking vacations and thus taking vacation ownership memberships.
Okay, that sounds interesting, but let me ask you about the biggest space in India right now, the biggest sector, which is financials. You can't avoid it completely or duck out of it as a mid-cap investor. What's your preferred way of approaching this one? Have you been enamored of this whole financialization of savings theme through brokers, insurance companies, asset management companies? Have you tried to play some of the smaller private banks? Or are you buying value in some of the new or public sector banks? What's been your approach as a mid-cap investor there?
So we've looked at the whole, the whole gamut of companies in front of us, and a lot has been going on. And it depends on when you sort of got into this, into the game to evaluate these on a close basis. It is historically very apparent that mortgages and consumer loans, that consumer part of the business of any public or private sector bank, was always the crown jewel. It always grew faster, and it was very high quality credit, effectively very low rates of default, which is clearly known. And then you got these sharp focused 3 or 4 companies which took off, and such as Gru Finance and Repco, etc. And people really got very excited by it. Canbank Homes, Canfin Homes, etc. Then you have this aspect of financialization of savings, the trigger being demonetization and a huge inflow into bank deposits, and then that went on into whether it's fixed income mutual funds or equity mutual funds more recently. This one is a little unclear to me, honestly, because I'm not sure if people have changed on a 6-9 month basis their habits. So there's a lot written about the relative options are very poor, real estate is just going nowhere, fixed income is not there and gold, etc. I'm not in that camp. I don't think people habitually change so dramatically to what we are witnessing. So I think there is a large cyclical aspect to it, where there is a market cycle which is playing out, and brokers are absolutely pro-cyclical. So whether it's Motilal Oswal, IIFL, Edelweiss, etc., they are seeing a lift in earnings of a very, very high magnitude across businesses. So it's just not the broking business; it's asset management, it's personal and unsecured loans, etc. The whole gamut of business. So I think there's a cyclical aspect there. One would want to pause there. A couple of points of our interest are maybe like an MMF Financial or a Shriram Transport, truck finance, pro-cyclical, very solid, secured sort of moat around their type of business, because to do second-hand truck financing is much more challenging, especially on recoveries, receipts and recoveries. So we are more positively predisposed to those. They were in a transaction which has not been consummated, as we are aware. So we're looking at that aspect of Shriram or Mahindra Financial much more closely as one piece of it. There's obviously the usual sort of Sundaram Finance, etc., which are not so much in the news. They're not flashy stocks where everyone gets excited at the same point in time. So there is still an opportunity there, and we're looking at it sort of positively. The last aspect has been the most recent listing of Reliance Nippon Asset Management or Reliance Mutual Fund. So that is now a direct opportunity, apart from obviously a couple of insurance companies which have also listed. So the work is cut out. Our hands are full on these businesses to evaluate and see if they're giving us appropriate value for our return expectations over the medium term.
Interesting point you make, Ayaz, because you seem to be in the camp which believes that all this talk back home about how domestic investors will continue to pump money into the stock market, and that will mean that PE multiples will remain elevated for a very long period of time. You don't necessarily agree with that, that this pool of money has walked in to stay pretty much permanently, and this trend continues over the next 5-10 years.
Yeah, I mean, if you were to be a believer, then you're a believer in the most infamous statement of this time is different, which is that market cycles do not exist. So I don't think it's the nature of the money, whether it's FII money in India or domestic money. The greed and fear is always going to be around. And so right now there is a fear of missing out, so to speak, and people are just jumping in. There's a lot of money which has come in the recent 6-9 months, and if you were to take a dipstick and see TV shows around November, December of last year, I don't think any industry expert or media professional would have given India a chance to probably have a 25 to 35% stock market return across different indices, and then individual funds have done even better. So I think on balance, these kind of never kind of stories and superlatives are clearly an exciting bull market phenomena. But that being said, I have been a sort of mid-cap money manager and a believer that at some point in time the size of the domestic money would be a bulwark against the sell-off by foreign investors who have other opportunities, in say in Indonesia or Thailand or Philippines or China, etc. And thus the kind of mid-cap carnage which we used to witness way back in the 2007 sell-off or 11, 12, 13 sell-off may not be there once that were to come about. Now, is this the recent catalyst which has brought that? The jury is out on this one. We'll like to watch it, whether these flows sustain and people have indeed changed forever, or they've just remarked about part of the allocation from fixed deposits to equity mutual funds. And if that is indeed the case, then I think we'll have to reevaluate these statements that I'm sort of also believing.
As always, a pleasure. Good luck with your fund, and thank you very much for taking time out today.
Thank you, Uday.